From one of the most profitable businesses in the world to the largest on-chain gold buy ever done, in today's video, we're going to do a high-level overview of all the different Perps exchanges powering these incredible milestones within this economy that's slowly becoming programmable. And more specifically, we're going to touch on how they actually stand apart from each other and how they all seem to utilize Arbitrum one way or another. Without further ado, let's jump right into it. So I made this chart a couple of days ago with data from DeFi Llama. Now this number obviously will change as market conditions change, but at the time of writing, 75% of all open interest for perps within crypto were tied to Arbitrum one way or another, with a good majority of it coming from Hyperliquid. That being said, there are a handful of decentralized exchanges that still account for a large chunk of perps that either live on Arbitrum One or use their own Arbitrum chain. And since we're going to go over a handful of different perps exchanges, I'm going to keep it very light, very simple, and kind of just show off some of the differentiators that a lot of these different protocols have, starting off with Variational. Now, I would say they're most known for their market breadth. It's very specifically the fact that they have over 460 total markets to choose from. I made a video about this previously, so if you want to actually watch a full video covering Variational and how some of their Perps exchange works, you can go ahead and click on the link below in the description so you can watch it. But that being said, they've recently done some changes to how their protocol works, including sunsetting something called loss-free funds that they were previously known for, but that was more in favor for better pricing and of course increased protocol revenue. So kind of just a way to make sure that what they're building lasts a longer time and just serves as a better product for all end users. They've also announced that they're launching real-world asset support soon, so keep that in mind. Next, we have Ostium. Now, these guys are also very, very well known within the entirety of the crypto ecosystem. A lot of people use Ostium to trade real-world assets, such as the S&P 500, different foreign currencies, stocks, commodities, as well as ETFs. They've also been making a pretty big splash outside of the crypto community by appearing in the Wall Street Journal, alongside having the biggest or the largest on-chain gold order ever on-chain, with minimal slippage, might I add. Next, we have a platform called Boros by Pendle. These guys allow you to trade funding rates on margin. Now, just a quick TLDR for a lot of you who may not even understand how that works. If the price of this contract for BTC USDC is higher than the spot price, then all longs will pay shorts, and then vice versa. If the perpetual price is actually lower than the spot price, then all shorts will pay longs. Even the average perps trader might even find this a little confusing, so if you do, they have an incredible section here called Get Started, where you can select the asset, select the exchange, the time period, and the funding rate prediction, and it'll search for a strategy that fits your needs. And what I personally like the most about this is that I don't think that any other Perps platform allows you to trade funding rates. So yeah, pretty novel. And of course, lastly, we have to give a shout out to GMX, one of the OG Arbitrum projects that have been around since essentially the first day Arbitrum launched, which at this point has been about over 4.5 years. So it's been quite a long time. And one resource I'd highly recommend if you're looking to track perps by volume, by open interest, etc., definitely go to DeFi Llama. They have a great perps page that highlights a lot of different protocols that we're actually going over today, including Variational, Ostium, and some more that we'll talk about pretty soon. So one question you might have at this point is, why would anyone launch a perps exchange on Arbitrum to begin with? Now, there are already a handful of them, as I just mentioned, and there's also a longer tail of perps exchanges that I have not mentioned just for the sake of time of the video, but there are three main reasons why people launch perps exchanges on Arbitrum today. One of them is that Arbitrum happens to be one of the fastest chains in crypto at 250 milliseconds for its block times. In comparison, you can think about that Solana has about 400 milliseconds for block times, and Base has about 2 seconds per block time. So Arbitrum is essentially 8 times faster than Base, and I can't do math right now, but just enough faster than Solana. Number two, fees are now ultra low. And what I mean by that is that Arbitrum recently went through an upgrade actually at the beginning of this year, allowing for higher capacity during times of high demand. What that means is when there's times of really, really high price fluctuation for Bitcoin, Ethereum, or any other asset that people are trading on chain, these perps exchanges tend to get overloaded with transactions, with people using it, and whether it be bots, people, spam, etc., the chain still has to make sure that it can actually process all that throughput. And in this recent upgrade, Arbitrum actually measured higher than all of its L2 competitors, making it the best place for high frequency trading during times of volatility. And lastly, Arbitrum already benefits from the momentum of existing perpetual exchanges that rely on it for liquidity, meaning that there's already tons of liquidity coming in and coming out of Arbitrum every day. If you go to Artemis, you can see that the top inflows and outflows on a daily basis tend to be the highest amongst Ethereum, Arbitrum, and Hyperliquid. Don't worry, we're going to talk about that closer to the end of the video. All right, now what about perps exchanges that have their own chain using the Arbitrum stack? Well, first, let's touch on EdgeX. Now, EdgeX is actually one of the biggest perps platforms in all of crypto, and they just recently announced a re-architecture of their entire exchange with one of their 2 VMs being built on the Arbitrum stack, with their main goal of being able to power the future of 24/7 finance. Next, we have Ethereal, who also has their own Arbitrum stack chain, and it's actually focused on the growth of USDE, which is Athena's stablecoin. So So part of their strategy is allowing for people to perps trade when they want, and then when they're not, their stablecoins that are sitting on the exchange actually get yield. And of course, there's also a longer tail of Arbitrum perps that operate using their own Arbitrum chain as well, including Rhea chain and Eventum. So why would any perps exchange actually build using the Arbitrum stack in general? Well, there's two main reasons. One of them being bottoms-up customization. And this is mainly for teams that have their own engineering and research team that know exactly what they want to build and how they want to build it, but just need the right stack that can actually mold to their blueprints. This is really where the Arbitrum stack shines. And in this case, that could be custom gas token, that could be faster block times, like down to 100 milliseconds, or sometimes potentially even lower than that at some point. That could be a custom virtual machine design. So instead of Solidity, you could have Rust, C, C++, stuff like that, alongside a slew of other customizations that are really only possible with the Arbitrum stack. And another reason could simply be to just make sure that you're capturing as much revenue as you possibly can. Now, this is a story that kind of goes beyond perps exchanges and really applies to many different blockchains, including Robinhood, for example. They're building out their own Arbitrum chain, starting off on Arbitrum One and then migrating to that later. But the idea there is they can build their stock tokens, go to market immediately right away on Arbitrum One, and then at some point migrate over to their own chain, have their own ecosystem, build that out with their own pool of developers and talent, and then of course be able to capture the revenue that the chain ends up generating. And of course we have to talk about Hyperliquid. Now, fun fact if you didn't know this, but they actually might be neck and neck or even surpassed Tether as the most profitable business in the world per employee. Now, some people may ask, what does Hyperliquid have anything to do with Arbitrum? Well, they actually use Arbitrum One to source liquidity from to onboard into Hyperliquid. So essentially, your capital needs to touch Arbitrum first before it hits Hyperliquid. Now, there are some different onboarding mechanisms that they've implemented since the beginning, but that still tends to be most people's onboarding mechanism. And of course, the same thing applies to Aster, which more or less has very, very close ties to Binance, but they do have multiple sources of liquidity, with Arbitrum One being one of them. As you can see, Hyperliquid is right here at the top. You have Edgex as number 3, Aster as number 4, and then kind of going down here, you have a couple other ones. I know Apex also uses Arbitrum for deposits. It's possible Lighter does as well. I could be wrong on that one. Ostium, Variational, Rhea, and again, if you keep on going on the list, you'll kind of see a lot of the different ones that we have mentioned here. Now, one common question I get is, how does Arbitrum even benefit from having perp exchanges, A, not being built directly on Arbitrum One, or B, not using the Arbitrum stack? So in this case, Hyperliquid and Aster, for example, how does Arbitrum benefit from them using Arbitrum One as liquidity? Not anchoring your exchange to Arbitrum in one way or the other, even if that means not even including it as a onboarding option for those that are not built directly onto Arbitrum. You're doing yourself a disservice, because that's where a vast majority of liquidity flows in and out of because of the existing perps exchanges that already use it. So again, if you're looking at Artemis, top inflows, even from a 3-month period, inflows and outflows, Arbitrum, Ethereum, and Hyperliquid always, without a doubt, are the top, and it's by far. So let's go to a day, for example. Let's go ahead and filter by a day. There you go, same thing. Arbitrum, Hyperliquid, Ethereum, inflows and outflows. That being said, obviously the net sometimes will be negative for Arbitrum, sometimes it'll be positive. It really just kind of depends on the day. But the point is that liquidity flows, and that's why if you're building perps in general within crypto, you would be insane to not use Arbitrum one way or the other, since that's where all the money is. That being said, what do you think? Are you interested in perps? Have you used them before? See you guys on the next one. Peace.